This is Sam Putnam.
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 There's one stock that is about to skyrocket. You probably have heard of it. It's Spotify, SPOT. It's a big stock. It is very dependent on consumer buying appetite, and that appetite does appear to be intact. The ticker we want to look at when we look at Spotify, you've also heard of it, it's Netflix, NFLX. Let's look at these two tickers. Let's talk about what they do, and let's talk about the risk factors for Spotify, as well as the growth story. This is a big stock. Don't normally talk about stocks this big, except when they're about to break out. So let's jump in to the analysis. This is Spotify right here, SPOT. It's at this important 730 level, and if I zoom out on a yearly chart, there is blue skies up above 800. So 800 is going to be a massive psychological level. Now, we'll jump back into some technicals here as far as when to buy it based on the numbers, the stock price. But there is some controversy, okay? If you've heard of Neil Young pulling his music from Spotify, other artists have pulled their music from Spotify, and it was based on Daniel Ek, the Spotify CEO's military investments, okay? Sounds very similar to the controversy around Palantir. Has that had an effect on Palantir's stock price? No, but it's worth mentioning. He did invest $600 million in a German defense technology firm. Of course, it's German. Peter Thiel's German. Peter Thiel is part of the PayPal mafia, and now the Palantir, and now the Trump mafia. It just keeps getting more and more worldly. So look, these are the recent earnings, and we're going to jump back into the chart again because everything we do on this channel is saying, hey, here's a chart. We could know nothing about this logo. We could know nothing about Spotify and still say, wow, okay, this has built up a base for a few months and now it's turning up. It's not super extended from this green line. It's only 15% from this 200-day moving average. And that's generally a safe place to buy a stock before it's overextended. If you want to see an overextended stock, take a look at something like, if not SanDisk, which I'm unable to spell right now, Bloom Energy is an example of some stock I would never buy right now. It's 200% up from that green line. You can see it on the chart, but it never hurts to have that indicator, which is come by default on Robinhood. Now, Spotify, besides that $800 whole level, there could be a reaction at that level. If you zoom out to the 5-year, this thing has rocketed up since early 2023 after nearly every stock went down in 2022. And this is October of 2020 on the 5-year. But if we really zoom out, this company actually only listed in 2018. So it's only within the past couple of years that it's had this massive growth from 100 to 700. Monster growth, almost similar to Monster Energy, which is not MSTR, but That was the largest move on the entire stock market, is Monster Energy, an energy drink. And Spotify is also in that category of a consumer good. I know it sounds basic to talk about a company that we all know and love, but take a look at this. Oh my God, right? This is Monster Energy. This is back in 2006. But even if you look at the time Spotify joined the stock market in 2018, this is still a double on Monster. Of course, with a tech company, you get even more exponential moves. Okay, not a double, but a 900% move, an 8x, whatever it is a lot. So those are the levels, and this earnings reaction was pretty solid. This is where the comparison with Netflix comes in. Netflix kind of recovered, but initially it did sell off on that earnings reaction, okay? So if Netflix can turn up, Spotify also will turn up. Netflix is a bigger company, but I do think right now, given this curl up and volume trailing off, the moving averages being very close to one another, which is an indicator of the days on the chart being very compressed, I think Spotify is the play over a stock like Netflix, which is kind of chopping around and only moves 2% a day. This is average daily range. So that's Spotify, and the reasoning to buy it, not necessarily that earnings, okay? Because the earnings did have a net loss, but there were some promising pieces of information, user growth, and record free cash flow, okay? I don't think that you need to dive into anything in detail here unless you were a growth investor, a venture investor. This is a publicly traded company, so we can look at the monthly active users and say they increased, and that's great. We can say the premium subscribers increased 10%. That's great. But really all we need to do is look at the chart and say, well, there's nothing too glaring here. The US dollar negatively affecting revenue is a factor that is unique to this company because it's not headquartered in the US, even though it's a publicly traded ticker. So that's something to be aware of. But this is basically the number we want to look at, 4.2 billion in revenue. And if there is any significant controversy, that will reflect in the revenue. And so far, it hasn't, okay? Netflix is the best company to look at in terms of stocks that are going to perform. And if they perform, Spotify is going to perform as well. We know about Apple Music. We know about Amazon Music. But those are small pieces of the stock appreciation for Amazon or for Apple. So it's really just Spotify that is operating as a near monopoly business, and all we have to worry about is there going to be any major controversy, which so far these have been token controversies, kind of like drinking bottled water at a bar. It's not going to put the bar out of business, okay? So all we have to really figure out is, are there going to be any big pieces of news that hurt Spotify? and there hasn't been. They have a multi-year global partnership with Sony. The record labels like Spotify now. They've turned the corner. They have $4 billion in revenue. And they're growing monthly active users, both free users and paid users. So it's hard to bet against this company. It's easy to think that, hey, the fact that I use this company means that it must be good. And that's a Peter Lynch approach that is not incorrect, but can lead an investor astray. So they are adding podcast video and clips, but it's not really about little product updates that might get power users of Spotify excited. All we really have to figure out as investors is, of all the stocks in the market, why pick this one? This just so happens to be a time where this stock, that the product is loved by a lot of people, also is at a point on the chart, meaning there's been a lot of buying and selling, agreeing upon this price, and there's more supply, more demand than supply. I'm thinking about supply of music. There's more demand than supply, means this is going to go up. So we got to not be wedded to what this company does, even though it's fun to talk about and exciting. You could say the same thing about the monster chart. On about a 5-year time scale, it's been pretty choppy, but you didn't have to know that Monster was making people super stoked to know that if a stock goes sideways, starts to break out, or even at a better spot would be kind of a compressed time period like this one where it starts to break out, there are opportunities to buy. It's never easy to get positioned in a stock like this, where it goes sideways for, in this particular case, this was 1.5 years. But you don't have to worry about what time scale this is. You just have to say, if a company has a range up and down that is a lot and then suddenly is less, that means that price level is getting agreed upon. And you don't necessarily know if it's getting agreed upon, indicating that the price is about to go up or about to go down. But what you do know is that this gives you an opportunity to get in without it chopping around like it was in this time period before it picks a direction. Because you can see, as soon as it picked a direction here, it just went, okay? And that's how we invest as investors. We pick a spot, we risk $1, and then we make 10. And you know what? Sometimes you're not going to be right and you're going to lose that $1. But when you get those movements where you make $10 per share as opposed to losing 1, those really pay for a lot of losses. So that's a little bit of a reminder of what we're up to here. This is the chart. This is the time frame. This is a daily time frame. Yours might say 1 day on your broker. That's totally cool. I just use the 24 hour so I can see what it does overnight, which doesn't matter on most big stocks, but does matter on some little stocks. And if you like this information, you like talking about this, maybe you've got some stocks you want to talk about in a community, head over to stockscommunity.com. You can join for $25 right now and get a 7-day trial. If you use the discount code 25, that's 25, you will get 25% off that trial period payment. So it's super reasonable welcome offer to get started. try it out. And if you haven't hit that subscribe button yet, hit that button to get notified of future stock ideas. And I will see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.